Good morning, and thanks for joining us for a Tax Practitioner Board webinar. My name is Ashley Dowsard, and I'm joining you from Ngunnawal and Ngambri country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. I'd like to pay my respect to them and their cultures and elders, past and present. To begin, I have a few housekeeping messages. First, you can access the slides in the platform today, or you can obtain a copy from visiting our webinar resources hub at tpb.gov.au/webinar-hub. We'll also email you a copy of the slides after the webinar. Today's webinar counts towards your continuing professional education or CPE, and you can claim 1 hour for attending. In relation to claiming your CPE, we'll issue an attendance certificate to those of you staying on for the duration of the webinar. Today we will cover what we consider a high-risk tax practitioner, how we identify high-risk tax practitioners, our focus areas related to high-risk tax behaviour, penalties and sanctions, recent compliance case studies, and how to report misconduct. We'll finish by answering some of your questions, so keep them coming throughout the presentation. We have Andrew and Vanessa from our Law and Compliance team to answer your questions as we go. Now, I'd like to introduce our speaker for today, TPB Chair Peter DeCure. Welcome, Peter. Over to you.
Thanks, Ashley. It's good to be here. In the first instance, I'd just like to set the scene. As I've said a number of times, the vast majority of tax practitioners follow the legislation and the requirements of the Code of Conduct in their day-to-day practices. And today's webinar will be focusing on a number of people who don't do those things. Approximately 9.5 million individuals and 2.9 million business tax returns are lodged through tax practitioners, which emphasises the importance of the tax practitioner profession. There's a small group of tax practitioners who pose a high risk due to their own non-compliance with the Code of Conduct and other legislative requirements. Our response to those who are not complying with their obligations is to take firm action to both protect and support the community and to provide a level playing field for the practitioners who are doing the right thing. Now, let's have a look at what does a high-risk tax practitioner look like. A high-risk tax practitioner is someone who's reckless in their work, often deliberately. They may be an unknowing accomplice or to illegal activity or willfully blind to their own misconduct. They're likely to lodge false or incorrect returns. They're likely to have poor compliance with their own tax affairs. They often face allegations of fraud or criminal activity, and they're often involved in promotion of aggressive tax schemes. And I will emphasise our work in relation to practitioners' own tax obligations. Where practitioners have problems meeting their own obligations, we often find that they're involved in other activities that are completely inappropriate. When we assess high-risk behaviour, we're also considering unregistered preparers or participants in the tax system who are not registered practitioners with the TPB. This provides real danger both to the profession and to consumers, and we do our very best to protect everybody from those unregistered participants. Let's move on, and let's do some looking at how we identify high-risk practitioners. So at the TPB, we have a range of resources available to us, and we identify high-risk practitioners through a number of sources, not the least of which is complaints from the public or complaints from other members of the tax profession. We often see media reports or public information in relation to disciplinary or criminal proceedings. We often see information in relation to civil disputes in tribunals or courts. We use data analytics tools of our own, and we also work closely with other agencies, including the ATO, who have significant information and data in relation to behaviour in the tax system. It's not just about risk appetite or personal referrals. We also look at interactions between tax practitioners, their clients, and the system. And as I've said, we look at tax practitioners' compliance with their own tax obligations, and we also look at tax practitioners' interaction and ongoing engagement with us at the TPB. When we're talking about risk assessments, we identify high-risk tax practitioners through our detailed risk assessment to understand the factors and risks and drivers of behaviour. These assessments include looking at practice size and specialties. We look at target markets of practices. We look at the experience of the supervisors and the controlling minds of those practices, and from time to time look at the track records of those participants. After building a risk assessment, we will assess the level of risk that a particular tax practitioner poses. Once that evaluation is complete, the next step is to review the specific complaints in the process. Let's move on now to the complaints process itself. Complaints can be lodged with the TPB via our online complaints form. They can be lodged through our phone lines if necessary. It's much better to use the online complaints form because that will make sure that you provide us with all of the detailed information that is required, whether it be a complaint from yourself as a registered tax practitioner or from the public at large. In 2024-25, our risk and intelligence team received over 13,000 complaints and referrals. These came from a wide range of sources, including taxpayers who were dissatisfied with the level of service they'd received from their practitioner, tax practitioners bringing problem behaviour to our attention, anonymous dob-ins for matters which may relate to issues such as fitness and propriety, e.g. advising us of criminal convictions, referrals bringing unregistered activity to our attention, which is very valuable to us. Also using our own data analysis and risk identification tools with human supervision and quality assurance. All the complaints that we receive are firstly triaged and risk assessed. We're committed to identifying and prioritising and addressing significant or serious professional misconduct with a fair and proportionate approach. As I said, we undertake the risk assessment of the tax practitioner and consider whether further inquiries are appropriate. This can include contacting the complainant or the tax practitioner for further information or evidence which may support the allegations. So just having a detailed look at our investigation process itself. As you can see, there's 8 steps to the process, and this slide is a bit of a simplified overview of it, so I'll give you a bit more detailed information. As we've discussed, the first step is the identification of a potential breach, and it's at that point that we do our risk assessment, and often we'll issue a please explain letter to the relevant practitioner. After receiving a response from that practitioner, we'll review the behaviour and the evidence supporting it and make a decision as to whether there needs to be further action. In particular, that might require us to make preliminary inquiries and set out specific information that we want to receive. If after that review we have enough information, we're likely to issue a please explain letter to the practitioner, asking them for their explanation of the behaviours or facts and circumstances that have given rise to this complaint or this referral. Having received and reviewed the response to the please explain letter, if we're satisfied that there is no need for further investigation, we'll probably sign off with the practitioner and let them know that no further action will be taken. Alternatively, if we believe there is serious misconduct that needs to be reviewed, we will move into a formal investigation. A formal investigation can be authorised by the Tax Practitioners Board or its delegates, or a Tax Practitioners Board investigation manager. The first thing that will happen if a practitioner is going to be subject to a formal investigation is that the practitioner will receive written advice that they are subject to a formal investigation. Step 5 will be the investigation process, where detailed inquiries will be made to establish the evidence, and at the end of that, the evidence and a BCC submission will be forwarded both to the practitioner and to the Board Conduct Committee in the event that the investigation substantiates bad behaviour. At the conclusion of that phase, the practitioner, having received the full Board Conduct Committee submission, will have the opportunity to respond to the allegations that are made in that decision before the Board Conduct Committee considers their case. If it gets to the point where the Conduct Committee considers their case, the decision in relation to the alleged breaches of conduct code will be made, and the final step will be to notify the practitioner of the outcome of that Board Conduct Committee case. In the event that findings are made against the practitioner and sanctions are imposed on the practitioner has a right of review and appeal. In particular, they can appeal to the Administrative Review Tribunal. One of the things that is very important to us in assessing complaints and referrals is the extent to which the community and or the clients of various practitioners are vulnerable to the behaviour of the practitioners. So we give serious consideration to the vulnerability of the clients and the broader community if inappropriate conduct continues. This includes factors like promotion of tax avoidance scheme and the likelihood of future occurrences of promotion of tax avoidance schemes. The principle is simple. The greater the harm and the more likely it is to happen again, the higher the risk of the behaviour. The high-risk behaviour can be intentional, it can be fraudulent, it can be willfully blind, it can be reckless and indifferent, it could manifest as incompetence, or it could from time to time simply be accidental. We'll develop our risk rating based on the likelihood and prevalence of the behaviour, in particular the likelihood of that behaviour reoccurring. Let's talk about our focus areas for the 25-26 year. So in a compliance sense, we have, like most organisations, done some prioritising and some generic risk assessment and identified the areas that we think provide the highest risk to the tax system and to clients. So we'll be focusing on practitioners in particular who help clients to avoid paying tax debts or engage in illegal phoenixing activities, practitioners who put their clients into schemes that are specifically designed to avoid tax, practitioners who facilitate shadow economy activities, so that practitioners who are helping their clients to avoid tax through the shadow economy and use of cash and avoidance of the GST system, etc. We will be focusing on practitioners who encourage their clients to overclaim work-related expenses, practitioners who engage in activities that are designed to exploit vulnerable Australians, and we'll give you some examples of that later today. And we'll also be focusing on practitioners who fail to meet their own tax obligations, and in particular those who are also engaged in high-risk behaviours that may influence their clients. So let's now have a look at the type of action that the TPB might take in some of these circumstances. The consequences for failing to comply with your obligations under the Code of Conduct can include a range of sanctions that are made available to us via the Tax Agent Services Action. Firstly, written cautions can be provided for, so if inappropriate behaviour has been identified through an investigation at the lower end of the scale, it may be resolved by providing a practitioner with a written caution. We also have the capacity to make specific orders that a practitioner might need to comply with. So that might, for example, be completing a course of education or relevant training. It might be a restriction on the range of services that you're entitled to provide. It could be a requirement that a specific practitioner work only under the supervision of another registered tax practitioner. And in the more serious cases, it can result in suspension or termination of your registration. In the event that your registration is terminated, the TPB can impose a period of up to 5 years where a practitioner is ineligible to reapply for registration. Now, as I've tried to emphasise a number of times, the severity of the sanction depends on the nature and the extent of the breaches and the individual circumstances. As I mentioned earlier, if breaches are found and sanctions imposed, a practitioner has a right of appeal to the Administrative Appeals Tribunal, and noting that the Administrative Appeals Tribunal, if it hears the case, may choose to publish its findings in relation to that case. In severe cases, the board may apply to the federal court, which can impose civil penalties for each breach of the Tax Agent Services Act. In particular, an individual can receive a fine or a penalty of up to $82,500 for each breach. A body corporate can receive a penalty of up to $412,500 for each breach. The board may also refer a tax practitioner's conduct to the ATO in cases where tax crime investigations may be appropriate, or we can also refer practitioner behaviour to law enforcement for criminal investigation or potential proceeds of crime audits. Let's look at the consequences of terminated registration. When a tax practitioner's registration is terminated, a number of things will happen. Firstly, the termination will be publicised. The decision is published in the Australian Government Notices Gazette and will be published on the TPB register on our website. We also notify the key bodies such as the relevant recognised professional associations, the Australian Taxation Office, the Australian Securities Investment Commission, ASIC where appropriate. We work with the ATO on strategies to assess and mitigate risks, including removing the tax practitioner's electronic access to online services for agents, i.e. remove your access to the portal. For very high risk cases, requesting the ATO immediately stop lodgements and refunds to potentially fraudulent accounts. We engage with the tax practitioners or the deregistered practitioners' clients to advise them that the practitioner is no longer registered and therefore not permitted to provide taxation services for a fee. We also monitor client movements and new practitioners to ensure that they are not going to practitioners who also exhibit risky behaviours or potentially phoenixing or reincarnations of the old practitioner's practice. I'd like to move through a couple of case studies just to demonstrate some of the extent of the poor behaviour that we're talking about. Case study one is about Mr. Peter White, who was formerly a partner at Ernst & Young, or EY as they're now known. His registration was terminated and a 5-year no reapplication ban was imposed. He was also the sole director of an associated company, Albus Advisory Proprietary Limited, which was also terminated with the maximum 5-year ban applied. Following a formal investigation, we found Mr. White's conduct to be serious, deliberate and dishonest, involving multiple breaches, resulting in him being found to be no longer a fit and proper person to be a registered tax agent. Our findings included that Mr. White was guilty of devising tax minimisation schemes for clients. He was guilty of personal tax evasion in relation to his own professional fees. He had made false statements to the ATO asserting that these professional fees were gifts. He failed to register and pay for GST liabilities of $205,000. he failed to lodge activity statements and income tax returns for himself and associated entities, and he failed to pay a legitimate tax debt of $2 million. EY terminated Mr. White's partnership after its own review, and the ATO initiated a promoter penalty case against him in the federal court. Mr. White's conduct clearly harmed his clients, his firm, and the tax profession, and did significant damage to the tax system, and requires a maximum penalty of deregistration and exclusion from the profession for the maximum period of 5 years. I would note that in the event that Mr. White did reapply for registration, he would have to demonstrate to the satisfaction of the TPB that he is a fit and proper person to be registered. I think this case is a clear demonstration of effective collaboration between the TPB and the ATO to address professional misconduct. The outcome also reinforces the high professional standards that are required of all tax practitioners in terms of compliance with their own personal tax obligations. In our second case study, we terminated the registration of Mr. Katan Al Hassan and also imposed the full 5-year ban for unethical conduct. And this case relates to the National Disability Insurance Agency, and the TPB, together with the NDIA, are participants in the Fraud Fusion Task Force, which is a group of Commonwealth agencies that work together to prevent specifically fraud, and in particular in the National Disability Insurance Agency sphere. Now, Mr. Katan had been a registered tax agent. He had also been deregistered and banned from reapplying for the maximum 5-year period for his unethical conduct both in the tax system and the National Disability Insurance Scheme. Mr. Hassan was sole director of Tabark Proprietary Limited, which has also been deregistered for 5 years. We found Mr. Hassan had breached the Code of Professional Conduct and was no longer a fit and proper person to be registered based on several dishonest dealings, including failing to correctly prepare and lodge business activity statements for Tabark, reporting false GST figures in circumstances where the company was in fact not carrying on a business. He failed to notify the TPB that he was permanently banned by the NDIS Quality and Safeguards Commission from being involved in the provision of NDIS supports and services, including in a consultancy capacity. He failed to lodge several income tax returns and pay debts on time for himself and his own related entities. He failed to notify the TPB that Tabark had entered into external administration. Our investigation demonstrated that Mr. Hassan had failed to complete the required CPE and did not maintain the required professional indemnity insurance as required for his registration as a tax agent. As you can see, Mr. Hassan was engaged by a registered NDIS provider. He defrauded that system and is not somebody who could be trusted to be a registered tax agent and act with honesty and integrity in the system. Our next example is in relation to an unregistered preparer. Many of you, I think, have heard of this case before, but this involves a judgment of the federal court addressing misconduct by Ms. Jessa de Abelos, also known as Jessa Van Stroh and Jessa Loyola. Ms. de Abelos was sentenced to 12 months imprisonment for criminality and contempt of court for acting as an unregistered preparer in breach of a permanent injunction imposed by the court. She prepared and lodged tax returns while not registered with the TPB and provided bad tax advice to hundreds of clients, mainly in Western Australia. In previous decisions, the court had found 531 individual breaches of the Tax Agent Services Act and imposed a $230,000 penalty and a permanent injunction to prevent further misconduct. Despite these significant sanctions, the court again found Ms. Davalos continued her unregistered preparer misconduct on a further 365 occasions, acting in contempt of previous court orders and then applying an additional penalty of 12 months imprisonment. In sentencing Ms. Davalos, Her Honour Justice Banks Smith noted the repeated nature of the misconduct and stated, "I accept the board's submissions that Ms. Davalos' conduct was of such seriousness that it can be classified as criminal. It has the tendency to seriously prejudice public interest in protecting effective administration of justice." So misconduct by unregistered practitioners can involve the exploitation of vulnerable clients. Many unregistered preparers prey on clients who are unfamiliar with the tax system, lodge false returns with the ATO, and expose their clients to significant taxes, penalties, and financial stress. And noting that an unregistered preparer is not capable of holding appropriate PI insurance, though there's no possibility of insurance recoveries for those clients. The TPB's compliance strategy will continue to address unregistered preparer misconduct to protect the community and the integrity of the system. Our next case study is in relation to Jaden Van Dyke, again, an unregistered practitioner. In this case, the federal court imposed its highest civil penalty ever in a TPB matter of $1.8 million. Jaden Van Dyke was a Sydney unregistered preparer. He committed 3,300 separate contraventions of the Tax Agent Services Act when he prepared and lodged income tax returns for a fee whilst not a registered agent. In addition to the $1.8 million penalty, the federal court ordered Mr. Van Dyke to pay the TPB's costs and permanently restrained him from providing tax agent services for a fee or reward whilst not registered with the TPB. If Mr. Van Dyke breaches the order imposed by the court, he may be liable to imprisonment or other punishment for contempt, as in the Davalos case. The federal court has found his conduct was deliberate and was undertaken for financial gain. He obtained significant financial gain of $1.6 million from his actions, generally charging $500 for the preparation and lodgement of each income tax return. Justice Abraham said Mr. Van Dyke sought to minimise his conduct, giving explanations which downplayed the circumstances in which he committed the contraventions. This was deliberate, repeated and sustained conduct which continued seemingly unabated initially, but later to a lesser degree after being warned of legal action in the cease and desist letter issued by the TPB. By continuing to defy the law and representing himself as a registered tax agent, he exposed many taxpayers to receiving tax agent services without protections offered of a registered tax agent, i.e. competence and PI insurance. This includes compliance with professional standards and maintaining PII. He also concealed that the income he had earned from providing these services from the ATO, further deliberately avoiding tax in his own right. So I'd like to move on to just quickly talk about our new breach reporting requirements that are designed to help us to preserve the integrity of the profession. And I think, just in context, we'll talk about breach reporting, but clearly we've just seen some examples of significant and serious breaches of the Tax Agent Services Act. As most of you, I'm sure, are by now aware, the breach reporting obligations commenced with effect from 1 July 2024, and there are two relevant types of breaches. Firstly, self-reporting. Under this requirement, a registered tax agent or BAS agent must notify the TPB in writing if you have reasonable grounds to believe that you have breached the code of conduct and that breach is a significant breach. The second reporting type is reporting another tax practitioner. Here, if you have reasonable grounds to believe that another practitioner has breached the code of professional conduct and that breach is a significant breach, you must notify the TPB and you must notify the recognised professional tax agent association of the other practitioner, if applicable, in writing. Now, just talking about reasonable grounds means having a solid factual basis supported by appropriate facts and evidence, not hearsay or unsubstantiated opinions. This is an objective test which looks at whether a reasonable person in your position would form the same belief under the same circumstances. You do not need to have conclusive proof, but you need to be able to appropriately substantiate your claim. We understand that notifying another tax practitioner's breach can be difficult or sensitive, especially if they are a colleague or associate. But it is important to know that you do expose yourself potentially to action if you fail to report a significant breach by another practitioner that you are aware of. It is also important to note that it's not appropriate to make frivolous, vexatious, or malicious complaints about other practitioners. Let's talk about what constitutes a significant breach. All practitioners, I think, should be aware of the standards of professional ethical conduct expected from them under the TASA, including the Code of Conduct. Accordingly, I think you should be well placed to understand what a significant breach of that code is, whether it be in relation to your own conduct or whether it be in relation to circumstances surrounding the conduct of another practitioner. In particular, we think you should be able to easily recognise these things where it happens in your own firm. We recognise that establishing if a breach is significant in relation to conduct of another practitioner may be more difficult, but as you are not necessarily privy to all of the relevant information. However, provided you have reasonable grounds to believe that the breach has occurred and it is significant, that will generally be enough to substantiate the appropriateness of a report. Now, and I think it's clear from the examples that we talked about earlier what significant breaches are. One of the things I want to say is that the significance of some of the smaller breaches could be easily looked over, but I will emphasise that if a person makes repeated small breaches, they can mount up to something that eventually becomes significant in terms of deliberately ignoring the law, being reckless in how you apply the law, or being, making false or misleading statements. So I think it's possible for a number of small breaches to amount eventually to a significant breach. So in terms of I think we've talked about that. In terms of how to notify the TPB, if you're notifying the TPB about a significant breach, you can follow the pathway here. In relation to making a complaint about another practitioner, please use our online complaints form, which is available on the TPB website. If you're making a breach report in relation to yourself, please use the change in circumstances notification form, which is part of your own registration. That form again is available on the TPB website. Now, I will point out that if you make a complaint either against another practitioner or yourself, you will receive an acknowledgement that we have received that complaint. That acknowledgement doesn't necessarily mean that we will be proceeding to a formal investigation, but we may contact you for further evidence or further information later after you've made the complaint. We won't necessarily notify you of the outcome of any of these complaints against other practitioners, but if you have self-reported, we will notify you at the conclusion of our review of that complaint. Okay. In terms of the need to notify recognised professional associations, this will be an obligation to you only if you are aware of the other practitioner's membership. This will be the case if you have actual knowledge that the other practitioner is a member of a recognised professional association, or you could obtain this knowledge by making reasonable inquiries. So you can do this pretty easily by checking if the person's accredited association is listed on our website. You could check our list of recognised professional associations. You can look at their email signatures or the signatures on their letterhead, which may well indicate whether they're a member of a professional body, and generally you can look up the professional body's registration. We don't expect you to conduct a full and thorough search, but you should do enough of a check using these sort of resources to have a reasonable idea. If you're unable to establish that the other practitioner is a member of a professional body after checking our register and making reasonable inquiries, you should document the inquiries that you've made before you choose not to make any further action in terms of reporting to the professional bodies. In terms of the timeframes to notify, when you become aware of a significant breach, you are obligated to notify the TPB and the applicable RPA where relevant within 30 days of the time at which you first became or first ought to have had reasonable grounds to believe that either you had breached the code of conduct and the breach is significant, or that another registered practitioner has breached the code and that breach is significant. Okay, time for some questions. Back to Julie.
Thank you. Thanks, Peter. That was really great. Thanks for sharing all that really useful information. So we do have quite a few questions for you. The first one that I've got here is coming from Gary, and Gary's asking about unregistered tax agents, and he wants to know, does any action eventuate against the people that are engaging an unregistered tax agent?
Gary, we don't normally take any action against people who are using an unregistered preparer. The only circumstances where we might consider that was if one of their clients was actively promoting the use of the unregistered practitioner. The thing that I can tell you we have a client care program, and we will, to the best of our ability, make sure that we work with those clients to give them sufficient information to choose an appropriate registered tax practitioner in their own area that has the skills to help them out with future lodgements and tax advice.
Great. Thank you so much for that, Peter. We've had quite a few people asking us today about the maximum penalty of 5 years when someone's had some high-risk behaviour. They're concerned that may not be enough time, and should there be more penalties for people that are involved in these sorts of behaviours?
Yeah, thanks, Julie. And that's become a really bit of a hot topic in the last couple of years, where the TPB's had some people ask, why don't we do more? And that's because that 5 years is currently the maximum. As a number of you will be aware, the government, through the Treasury, have been conducting some consultation and review of the sanctions that are available to the TPB. And we're expecting changes to be introduced to be operative from 1 July 2026. One of those changes we expect to see is an increase in that 5-year period from 5 years to 10 years, but that's yet to be formally legislated.
Thanks, Peter. And we'll definitely keep people updated on that as it comes to hand. We'll share that information through our usual channels on our website, in e-news, those sorts of things. So stay tuned to that. I've got another question now for you, Peter, which has come through from Beatrice. And Beatrice has asked, if you receive a notice of formal investigation, do you have an obligation to notify all your current and potential clients? So this is before any wrongdoing is found by the TPB.
Beatrice, no, if you receive a notice of formal investigation, you're not yet obligated to notify your clients. In the event that the investigation concludes and findings are made and sanctions imposed, you will at that stage have an obligation to notify your clients.
Great, thank you, that's helpful. Okay, the next question I've got is, I guess, in relation to some of these unregistered preparers, and we've got people asking how they can possibly lodge returns without being registered.
Unregistered preparers use a number of ways to do that. They can use, some of them are still using paper returns, some of them are using electronic lodgement programs that are available to the public through, MyTax and things like that. Some of them are doing what we call I'm having a mental blank, but some of them are illegally using the services of registered tax practitioners to lodge those returns on their behalf for a fee. So, there's a range of different ways that it can be done. Now, generally speaking, we and the ATO work together to try and identify those sort of lodgements that don't fit normal patterns.
Thanks, Peter. I think that answers that really well. Elizabeth has asked a question, might not be totally relevant to the high-risk practitioner, but just asking, do you need to be a member of a professional body, so a recognised professional association, to be registered with the TPB?
No, you don't need to be a member of a recognised professional association. The Tax Agent Services Act sets out the requirements or the registration requirements that have to be met, including requirements in relation to education, in relation to practical experience, and in relation to fitness and propriety. So it is possible to meet those standards without being a member of a recognised professional association. Our current stats indicate that approximately 50% of our registered population are members of recognised professional associations and have recorded that with us. The other 50% are either, approximately 50%, the other approximately 50% are either not members or have not informed us that they're members of a recognised professional association. The professional associations do have, they have some benefits. They conduct CPE activities. They have their own professional and ethical standards that can assist practitioners. So it can be a good move.
Thanks, Peter. Okay, I've got a question here from Julianne, and Julianne said, as a BAS agent taking on a new client, I lodged a serious complaint against a tax agent in July 2025. I've heard nothing from the TPB about it since. Can we get updates on these complaints, or at least an acknowledgement that our complaint was investigated and valid? She feels otherwise she may be sitting here not knowing if she's overreacted and wasted everyone's time. Both my client and the new tax agent are also interested to know if it was followed up, and not getting any feedback is a bit frustrating for her. So if you could comment on that, Peter, that'd be great.
Yeah, okay. As I said earlier, our process is that we should acknowledge receipt of your complaint, and I hope that you have had that acknowledgement. The next phase, as I've said, is that we may make further inquiries of you to help establish the evidence. If that's not necessary and the complaint is proceeded with, we will conduct the formal investigation. Now, sometimes that takes quite some time, but there isn't a process in place to formally acknowledge what action is being taken required by the law. What will happen is that in the event that the complaint results in sanctions being imposed, that will be published on our website when that happens. And that's all I can do for you at the moment. I'm sorry.
That's okay. Thanks, Peter. I might also recommend, Julianne, if you do have concerns that you haven't received an acknowledgement, you can send us a contact us form, which you can find on our website. So just jump on there and send it through, and we can look into it for you as well. Okay, the next question that I've got, Peter, is if someone wants to make a complaint about another tax practitioner, but they are worried about that practitioner finding out, what options do they have to remain anonymous?
So there are a couple of avenues to this. In the event that the person you want to, if you satisfy the definition of an eligible whistleblower, we can offer you whistleblower protection. So you need to look at that definition, and that will generally mean that you have a commercial relationship with the person that you want to complain about, i.e. as an employee or a contractor, one of those relationships. If you're not an eligible whistleblower, we would encourage you to make the complaint anyway. Emphasise to us that you want it to be a confidential complaint, and provide us with as much information as possible. We will do everything we can to protect your identity, But if you're not an eligible whistleblower, we can't guarantee that those protections will be available. But we will do everything we can not to disclose your identity and to seek independent evidence to support the complaint.
Great, thank you so much for that. Now, Peter, I've got a few questions about breach reporting, which I spoke about today.
Sure.
And first one that I've got here is asking, in regards to reporting on another tax practitioner, how is reasonable grounds defined? Could you give a bit of advice about that, please?
Well, as I said in the presentation, the test is really would a reasonable person in the same position as you make the same decision as you that there are grounds to support this. So I think there's a number of ways, but you should have some sensible evidence to suggest that there is a complaint to be made. That wouldn't be, I wouldn't have thought you overheard something at the pub or somebody was skiting about a particular piece of action. It might be that you were involved in a serious tax discussion group and one of the participants of that continually told stories about how they were avoiding tax or promoting schemes. It might be that you get a new client who comes to you and tells you about a tax scheme that was promoted to them. It might be that you get a new client who comes to you with a really significant tax problem in their previous returns, and when you talk to that new client about the circumstances, that they tell you that the previous practitioner led them down this path of non-compliance or inappropriate returns. So there's a range of ways that this can come up. I think what we want practitioners to do is to think about the evidence that they've got, to think about whether the matter is actually significant or whether a series of matters held together are significant. And if you get to the point where you think there's a serious issue but you're not quite sure, I'd encourage you to make the report to the TPB anyway, and then we can triage it and review it and decide whether it is or isn't significant and decide whether there is or isn't sufficient information. It's better to report to us in those circumstances where you think you're close and let us worry about it than not. The other thing is if you genuinely get to a point where you don't think you've got enough evidence or you don't think it's significant enough, make a file note around your own choice not to make the breach report in case we ever want to talk to you about that matter at some point in the future, so that you've got a record of your decision. And that demonstrates, due diligence and due care.
Excellent. Thanks, Peter. The next one I've got here is about a rectified breach. So do we still need to report those if someone's taken action to rectify the issue? Does that still need to be reported?
I think rectification rectification is a really important thing. And yes, you do still need to report the breach. Let the TPB understand the facts and circumstances. I'm sure that when we go through everything, if an agent has been prepared to acknowledge, to take responsibility and rectify, all of those things will stand that agent in good stead. And there's been a number of cases in the recent past where we've been able to work really effectively with agents who've had problems in their practices, whether it be, malfeasance or dishonesty of their employees or something like that. When those agents have stood up and said, look, we've got a problem, this is what we're doing about it, we've looked after our clients, we've done all of these things, you often get to the point where at the end of the investigation, findings are made that there's been breaches of the code, but the sanction might be as simple as a training program or a requirement that practice improves their supervision and control on internal practices. So, I think rectification is important, but it's not the only solution. So the breach report should still be made.
Great, thank you for that. I've had a couple of people asking me about accessing a recording of today's session, and yes, we are recording. It will be available on our YouTube channel. You can access that on our website if you just go to our webinar hub. So that one's easy. Okay, next one. Can an in-house accountant lodge company tax returns for the business?
Well, the facts of that are that a company is entitled to lodge its own returns, and is not obligated to use a registered tax agent to file those returns. If a person is employed by a company in a normal set of circumstances as an employee of the company, then yes, it is possible for them to lodge the company's tax returns, but the company takes full responsibility for those. Now that is entirely different to a set of circumstances where a company potentially contracted with an unregistered preparer. That would be a different set of circumstances, but an employee or officer of the company is entitled to lodge for the company, provided the company has made that decision itself.
Excellent, thanks, Peter.
And to clarify, Julie, the TASA talks about for a fee or reward. A fee or reward doesn't include a salary or wages paid to an employee.
Great, thank you so much. Okay, the next question I've got here is from Simon, and Simon's asked, should a tax agent make a baseless claim against another? For example, it's malicious or a personal feud. What sanctions would be applied to the person making such a complaint?
In the first instance, Julia, a deliberate, vexatious or malicious claim would be a breach of the code of conduct in relation to the obligation to act with honesty and integrity. And so we would quite easily make a finding of a lack of honesty and integrity, and potentially make a finding that the complainant was not a fit and proper person to be registered. So we have but in those circumstances, the full range of sanctions from a written caution through to potentially an order to do some training or a suspension or termination are available, just depending on how serious the set of circumstances was.
Okay, thank you.
Remembering that if you're found to be not a fit and proper person, you are not eligible to be registered.
Good point, thank you. Okay, I've got a question here from June, and June's asking, can I terminate the tax services if I have a client whose intention is to be fraudulent, but I have no evidence for that?
Certainly, under the rules surrounding the making of false or misleading statements, we expect an agent who is aware that their client has made false or misleading statements to the ATO to advise the client that the statements are false and misleading, and if the client refuses to remediate those statements, then to sever the commercial relationship with that client. So that's an absolute expectation. Now, for an agent who suspects a person is going to behave dishonestly, yes, you are perfectly entitled to cease to act for that person. Who you take on board as a client is a choice for you as the agent, and we strongly suggest that you should only work with clients who you believe share the appropriate ethical standpoint in relation to meeting their own tax obligations, because any of these clients who aren't prepared to do the right thing are putting your own business in danger, and bearing in mind, you have obligations under the Code of Conduct to ascertain the appropriate circumstances of your clients and to act in their best interests. It is not acting in somebody's best interest to facilitate or to assist them to avoid their tax obligations. And I think, if you're in circumstances where you think that's what you're being asked to do, I doubt very much that your PI insurance would help you under those circumstances either. So my very strong advice is to terminate the relationship with that client. And the client has no recourse against you for doing that.
Thank you, Peter. Just going back again to breach reporting obligations, I've had someone ask, who do these obligations apply to? Could you just go over that one more time for us, please?
Yeah, the breach reporting obligations apply to all registered tax agents and registered BAS agents.
Easy, thank
So
you.
they are obligations under the TASA.
Excellent. And I've got another quick one here from Nancy, and Nancy's asked, is there an age limit when applying to be a tax agent or a BAS agent?
I think you have to be 18 years of age, but I can't remember.
That
I'm pretty
is
sure
right.
you have to be 18.
Yep, exactly.
There's no upper limit.
No upper limit, that's good. Might be all we've got. I think we've answered most of these today.
Excellent.
Yeah, I think we're good, Peter. Thank you so much for your presentation today. So I'll just finish up, I think, by sharing a little bit of information with how people can stay in touch with us. So if you do want to find any more information or keep up to date, highly recommend that you visit our website, which is tpb.gov.au. You can also follow us on our social media channels. So we're on LinkedIn and Facebook. We also have a newsletter that goes out each month called TPB e-News, which you can subscribe to again on our website. Just go to tpb.gov.au/newsroom. You can also subscribe to our YouTube channel, and that way you'll receive notifications when we post new videos. So as I said before, we do record all of our webinars, and we have a really good comprehensive library on our YouTube channel of all of our previous sessions. So if you view those on YouTube, you can also still claim continuing professional education for viewing them. I just want to say a big thank you again to Peter for all his insights today. Thank you also to Andrew and to David for assisting with the questions today. And thanks to everyone in the audience today for sending through those questions and participating in the session. We do hope that you've found it beneficial, and the webinars are a really great way to keep up to date with everything and to also claim your continuing professional education. So if you're interested in attending any more of our sessions, jump onto our website once again at tpb.gov.au/webinars, and we have 2 more webinars to finish up the year. So we've got a couple coming up in December, which I'd encourage you to join us for. And then finally, just before we do finish up today, we have an exit survey. That's going to just quickly pop up in your browser when you leave the session today. It would be really helpful if you could take the time to complete it. It's super quick, takes only a moment of your time, but it is really helpful to us to let us know if there's any areas that we can improve on in terms of our webinar program. And also if there's any topics that you're interested in hearing about from us, please let us know in that survey, because we will actually look at those and try to include them in our program of webinars if possible. So once again, thanks everyone for joining us today, and we do hope that you enjoy the rest of your day. Take care. Thank you.